Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of December 29, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was not a good week for Delaware mortgage rates. They actually did move higher. If you take a look at the bond chart on the screen, you can see the big red candle drop on Wednesday, and that was when the GDP was released. So we had been recovering from a sell-off the previous week, but then after the on Tuesday, the bond sold off. And then on Wednesday, it did hit a bottom at a support. It fell through, it then recovered, and there was a green candle there, and then another green candle on Friday. Thursday was Christmas, so it was closed. So that last green candle was Friday. We had another recovery, so that confirms a bounce off support. So with that in mind, we're going to recommend floating your Delaware mortgage rate to start the week to see if bonds can continue to recover from this bounce off of support. But in the short term, though, be mindful. We could have a stock market rally, which could pull the bonds back to that support level. But we're going to start the week floating to see if we can build on that momentum. Now, if we dig into last week, the big report was the Bureau of Economic Statistics released the gross domestic product, which is called the GDP, for the third quarter of 2014. And it came out at a blistering 5%. It's the fastest pace of economic growth since the third quarter of 2003. So the big gains in the GDP were led by a surge in both consumer spending and business spending. Now, we had some other economic reports last week. The other one was consumer sentiment, December 2014, which came out very good, 93.6, which was up from the last month. It's the best reading in 8 years. That supports that blistering GDP of 5%. Consumers are feeling good about this economy. Personal consumption expenditure came out last week, which is commonly called the PCE. That's the Federal Reserve's favorite measure of inflation. That came out at negative 0.2%. So we basically have no inflation. Inflation year over year actually dropped down to 1.2%. So that's good news for bonds because inflation is the enemy of bonds. And then on Wednesday, we saw the release of the weekly initial jobless claims. That came out at 280,000 claims. That was a drop of 9,000 claims from the previous week. That's very good. Another very good report for the labor market. Jobless claims have been declining again. They've been below 300,000 since we had that one spike up. So doing very good there. And then in the housing news, the National Association of Realtors reported existing home sales for November 2014. Now, they actually fell by 6.1% from October to 4.93 million units on an annualized basis. That was below expectations of 5.2 million, and it shows that the housing market is choppy now. We're kind of doing good, we're doing bad, we're doing good, and we're not really, but this wasn't really a bad report because last month's was the highest it had been in a long time. So even though we did have a drop, still, housing market's still good. We'll have to see if this was just a short-term drop and will recover, or if this is a sign of the housing market starting to slow. Now, we did see the median home price for an existing home was $205,300. That was up 5% from the previous year. So what that means for a homeowner is the median homeowner had a gain of $10,000 in 2014 if they owned a home and bought it in 2013, because 5% of that 205 is about 10 grand. So that's some good news there on home appreciation, and that's the reason why you should buy and own real estate. Over time, you will make money as the market appreciates. Now, the Federal Housing Finance Agency released their home price index for October. It showed home prices up 0.6% from the previous month, which was above expectations of only 0.2%. So that's a good report on housing, but that's kind of dated because that's from October. And now in new construction housing, we saw the new home sales for November 2014. They were reported down 1.6% to 438,000 units. That was below expectations of 460, but not that bad, only down 1.6. We're still doing pretty good. We still got home builders out there building homes. And again, the market is choppy. We'll just have to see if this is just a short-term blip or is the housing market going to start to show some slowing. Now, some other housing news. Congress passed a bill called the Tax Increase Prevention Act of 2014. Had two important bills in it. The first one is the Mortgage Debt Forgiveness Relief Act of 2014 was included in there. So anybody had a short sale foreclosure, they do not have to pay income tax, federal income tax, on the forgiven debt. Without this bill being passed, Anyone had a short sale foreclosure could have a nasty tax bill waiting for them for their 2014 tax return. The second big item in there was they extended mortgage insurance deductibility to 2014. So if you paid mortgage insurance in 2014, you can go ahead and deduct that on your tax return as long as you make less than $109,000. Now in the local news, the next first-time homebuyer seminar is in Dover, Delaware on Saturday, January 10th from 10 a.m. to noon at the Dover Holiday Inn. And the next one in Newark at the Christiana Hill Hotel is Saturday, January 17th, and that is from 10 a.m. to noon. You can register either one of those events by giving us a call in the office, 302-703-0727, or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.